Another big thing that's happening is policy, right? I mean, the government's basically controlling the stock market right now. They're doing so through, tax cuts during the Trump era and through super easy money through the Fed, right? Just, printing money basically and handing it out to anyone who wants it. Whether that's in the form of a PPP loan or of an extension of unemployment benefits or buying government bonds, in order to keep the interest rates low. So they're doing a bunch of different things, way more than like, for example, when I was in business school 25 years ago, I mean, there was like one lever and it was changed the overnight lending rate. Now they've got 5 or 6 levers and all of them are pushed to the max. So the government, that policy and kind of how you unwind that or slow that down in order to, that on that last page, get that orange line back up to a more reasonable level is going to be super important. And if the government bungles it, it's going to be a big problem. So one of the things that clients talk about all the time, I mean, all the time, is Jason, taxes. What are we going to do with taxes? Are taxes going to kill the stock market? And I say my answer is probably not. So what this graph here is this chart, not a graph. This chart shows the dates of corporate increases over here, right? Increases in the corporate tax rate. And then they list the old rate and they list the new rate. The legislation name, which I don't care I think anyone cares about. And then here's the stock market returns, right? S&P 500 returns. The 3 months before, 3 months after, 6 months, and a year. As you can see, in a lot of these cases, you don't see a lot of red numbers. And a lot of times when I point this out to some clients, they say, well, Jason, of course, because this is a historically large increase. Well, I mean, Trump reduced it from 35 to 21, right? I've actually seen 2 different interviews with the main negotiator for the Republicans at that time, and just kind of laughed and said, I never thought we'd get to 21. I thought we'd be at 26 to 28. That seems like a good equilibrium rate. I'm surprised we got to 21. The Democrats are not going to let that stand. They're in charge right now, whether some people like that, some don't. But they're going to change that. They don't like that. They want the government, they want these corporations to pay more. Corporations actually pay a very, very small amount of the overall tax in the U.S. anyway. Households pay almost all of it. But still, they think that having a ridiculously low tax rate doesn't really make us that much more competitive in the global scene. And they want them to pay more. Again, I'm not here to agree or disagree with that. I'm just telling you what the people in power are doing. But you could see some pretty big increases, like 24 to 31, 31 to 40, 42 to 51. I mean, 51% in 1950. And 1950 was a boom time, and corporate tax rates were still 50%. They even went up to 53 at one point, which is crazy. But if you'll notice, there's not a lot of red here. And most of the red that is here is in here in 1941. These are the big down numbers. So a lot of people point to this and say, I knew it. I knew corporate tax rates were going to go up and it was going to kill the stock market. But something else happened. If you look at the date here, 9/20 of 41. So I'm not going to do any quizzes on this because I don't think Gary wants me having everyone unmute and blurting out answers. But something really big happened right after this tax increase. And it was in December of 1941. I think it was December 8th, Pearl Harbor. So I think a lot of these red numbers are probably a lot more of a function of, at that time, the largest attack basically since our independence on the United States of America. So I think that's probably why you see a lot of these big red numbers is because of Pearl Harbor and probably not because of the corporate tax. So again, I would say, Biden and the Democrats kind of want to go from 21%, where it's at now, to like 26 to 28. I think they're going to end up at the higher end of that, which is halfway between 21 and 35, where it used to be, it's 28. So again, I would suspect if you do that, they're going to go, corporations are going to pay a little bit more, and it might hurt the stock market a little bit, but probably not that much. You can actually calculate how much profit is going to come out if they did that, and then you can multiply that profit times what's called the PE ratio, and you can come up with like a total dollar amount of all the corporations in the S&P 500 and how much money is going to come out of, how much profit is going to come out, and then how much that should affect the stock market. And if you kind of do the math on it and back your way in, it's about 3 to 4%. So again, I think that that's bad. I'd rather that not happen, but I don't think it's something that is going to actually like demolish the stock market. So please, a lot of people, if you have questions, feel free to ask later on. And then this is the same thing. I won't spend as much time on this, but higher capital gains, this is this exact same type of chart, date, old rate, new rate, and how the market's doing. and again, I'm not saying I support the Democrats or their tax increases, but if you look at what they're trying to do on capital gains, they only want to tax people on over $1 million. So if you have over $1 million of total income, including capital gains, anything over $1 million, still everything under $1 million, you're the same, but everything over $1 million, they're going to tax you at a higher rate, like a pretty substantially higher rate. I'm not here to say whether that's good or bad or fair or not fair, but those people that have well over $1 million of income on a consistent basis, they're not spending. So from our perspective on this call of, is this good or bad for the economy? Again, I'm not arguing it's fair, it's good for the millionaires, but what I am arguing is from an economic perspective and from your like portfolio perspective, taxing the wealthiest people who all make over $1 million and then transferring that money and giving it to lower middle class and poor people who spend 100% of their income is good for the economy. Less saving and more spending is good. It drives our economy. We don't need more capital. There's so much capital in the world, interest rates are zero, right? We don't need to give millionaires more capital to go invest and drive interest rates down. They're already zero. So to give that money to the lesser privileged people, again, I'm not saying I support it, but from strictly an economic perspective, it should actually drive the economy and therefore the stock market. So I don't expect capital gains. Again, if we're talking about different headwinds, we're on our third one, or kind of the second of just taxes in general. I don't think capital gains are going to totally derail the economy.